Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Monday, 10th day of December, 2018, and this is the Daily Report for gold and silver. We do have gold fractionally lower on the day, currently down about $2.80 at $12.49.80. That is basis most active February contract. But as you will see when we pull up our technical studies, today's move is all dollar strength based. Silver also trading lower on the day, giving up about 8 cents at $14.61. Platinum down about 0.6% at $7.85. And lastly, palladium down $5.80 at $11.65. Now, we talked about the dollar. The dollar is extremely strong today, up 0.7% at 97.19. And that is in regards to a falling British pound and a Brexit vote that was put on hold. Now, an amazing recovery did occur today in U.S. equities with the Dow Jones Industrial Average, which had been trading down by 400 or 500 points at its low, I believe actually 600 points. It is currently closed and up 34 points on the day at 24,423. Standard & Poor's also showing fractional gains at 2637. And lastly, the composite index gaining 0.75% and closing at 7022. So traders, as we look at our daily candlestick chart, we can see that on today's move itself, we are looking at a lower day. But to me, there's a couple of things that are more noteworthy than the fact that we're down $2.80. The first of which is the low today, which came in at $12.4690. As you know, $12.4680 is the point in which we are saying should hold and become the new support level. We have good historical data supporting that. We can see that this was definitely a point of resistance. This back in October, beginning of November. The fact that we traded at but not below this particular price point to me bodes very well for the bullish side of the fence. The second thing that's noteworthy is we did have a high that came close to, although it did not challenge, the 200-day moving average, because I think that current minor resistance resides at the 200-day moving average, which is currently at 1259.90, with more major resistance at 1276, and that of course is based upon the 0.38% Fibonacci retracement. And realize we are using a long data set when we consider this particular move. The data set that we are looking at begins at the end of 2016 when the market was trading at about 1120 and takes us up to these multiple tops at 1370. So we have a lot of data that comes in this particular area, and because of that, I think that that's a very valid price point, along with the 0.23 at 1312. I do expect gold to track higher. Today we saw it track lower, but the realistic view of what we saw today was really all dollar based. And traders, to correctly illustrate that point, I've gone ahead and pulled up a daily candlestick chart of spot gold, and I've just put up the Kitco Gold Index. What we can see is when I took this screen print, spot gold was down about $4.40. It is currently unchanged at $12.4420. When I took this, it was at $12.4340. What we can see on closer inspection is that when we look at dollar strength as it relates to gold, that actually took away $5.20 worth of value today, and normal trading bid the precious yellow metal up by 80 cents, and that's where we got a net change of minus 440. Of course, that has changed. And traders, we can certainly see what a runaway dollar was today. We had incredible strength, closing up about 0.7%, beginning to track near these highs that come in around 97.50. We are looking at major resistance at about 98, and that is based on the 0.6% 0.618% retracement level. Now, one of the interesting things is the Fed is going to be meeting a week from Wednesday, and whether or not they raise interest rates will have a dramatic effect on dollar strength or weakness. We currently have strength, but if they do not raise the rates, we should see the dollar lose some ground and some value. We'll obviously have to wait till next week to see what their decision is. But I've just gone ahead and put up the Fed Watch tool by the CME, and what we can see is that the probability of there being a rate hike has diminished considerably between this week and last week. And traders, extreme dollar strength today has a lot to do with the weakness of the sterling or British pound, down 1.5%, currently at 1.256. And that is a decline of about 20 points on the day. We're looking at a weekly chart, and we can see that over this last week, the British pound has lost a lot as it trades against the US dollar. And traders, as far as our current trade is concerned, we are long February gold. We pulled good profits last week on our rollover from our December to February, as well as selling one of our Februaries. I will look to add to the position should we break with a vengeance through the 200-day moving average. But as I said, what is important to me right now is this low. This low is what we need to hold, which is tracking roughly at 1249. 1247 in that area. As long as we are trading above that point, I think that this will remain to be a very important support level. Maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.